Hey everyone, welcome to another video on my channel, and today in this video we are going to discuss why exactly is the market falling the way it is. If you take a look at it, the mid cap and small cap index have already entered the bear territory where they have fallen more than 20%. Not just that, Nifty has also significantly corrected from its all-time high of 26,270. If you take a look at it, even though the global markets are so strong, right? So our market doesn't seem to stop falling at all. So today we are going to go through this entire thing, try to see the market data, how exactly it has performed and what can be potential reasons why exactly our markets is coming down. So as you know, as per the latest guidelines, we won't be able to give any view on the market as to whether it is going to go up from here or going to go down from here. So we'll just stick to the data, we'll stick to the facts. So before moving on, there are a couple of things which I would like to tell you. So first one is with regards to First Stock. So our team jointly with First Stock, so we have actually sat with the First Stock team, and First Stock has now come with the latest trading platform. So you can see the glimpse of that right over here. So this is the latest platform of First Stock. So you can see the overall holdings, how your portfolio has performed, and there are a lot more features. So I'll be making a complete video about this maybe the next week, and I will also be giving early access to this latest trading platform by First Stock for people who have opened an account using the link in the description below, right? In case if you haven't opened, so it's totally free to open an account, and you will also be getting 2000 rupees worth free brokerage credits, which you can use it to test out this latest platform. So here the primary focus has been given to simplicity and speed. So the order time to and fro is under 35 milliseconds, and you can also try to explore the platform, which has a lot of new features which I'm going to explain in the upcoming week's video. So along with that, we also have the sponsor for this video, which is Delta Exchange. I will be talking more about them towards the end of this video. With this, now let's quickly move on to the video. So first, let's start by looking at the markets. So here we have the Nifty 50 index, and you can see that previous quarter Nifty was down nearly around 9%, and this quarter starting from January, it is down around 3% only. But the carnage has been seen in mid and small cap. So now when I actually open mid cap 100 or mid cap 150, right? So you can see the mid cap index. So previously, that is in the previous quarter, was down around 5%, but this quarter alone, it is down nearly 13%. And on top of that, when I actually open the small cap index, right? So you can see that previous quarter, the small cap index was only down around 2%, whereas Nifty was down nearly around 8%, right? But this quarter, you can see this index alone is down nearly close to around 18% in hardly 40 days. So today we are almost at February 14th, and this entire index is down 18% from January 1st. So when you take a look at it, a lot of this is actually dependent on the institutional activity. So let me show you an example, right? So this is actually the distribution of FII ownership across equity cohorts, right? So if you take a look at it, so this data is from 2005 up till December 2024, and you can see that so every time it's like a cycle where their ownership in small cap actually peaks out, comes down, peaks out, comes down, peaks out, comes down. But if you take a look at it, currently as of December 2024, they had nearly 10% or 11% in small cap. And this is the highest that they ever had previously, right? So just take a look at it. So this yellow line is basically their ownership in small cap, and you can see that it was literally the highest as of December 2024. So one very interesting thing here to note is every time it peaks, right? So we will see how exactly the market movement is. So once it peaked in 2007, right? So when we take a look at 2007, so you can see here it peaked out, and for the next almost close to around 3 to 4 quarters, the market or this particular index started coming down. So the second peak of ownership was made during 2010. So that is somewhere over here. So you can see post that. So there was again 3 to 4 quarters where the overall market came down. Again post that, the third peak was done somewhere during 2017. where again you can see 2017 it peaked out, and post that the whole index came down for 3 to 4 quarters or much more than that this time, right? So it looks more or less like, in case if this happens to be the peak, so the small and mid cap can be in for a much bigger correction. So I don't know whether it is going to correct or go up from here, but in case if this happens to be the peak, right? So there is going to be much more selling coming in from FIIs. So how do we know that FIIs are selling small cap or large cap? So first, let's take a look at the figure of FIIs selling. So in January, they sold nearly 87,000 crores, right? So, and in February, so in the first 15 days, they have sold close to around 25,000 crores. So just in matter of 40 days, they have sold more than 1 lakh crore worth of stocks. And today's selling can be even more, because you can see that the small cap and mid cap index is nearly down 3.5%. So the selling has been very aggressive by the foreign institutions. And how do we know that this 24,000 and 87,000 crores is mostly in small cap and mid cap? The reason is because of the price. So if you take a look at the price of small cap, so this index is down nearly 18% compared to Nifty, which is just hardly down around 3%. So there is a 15% differential. But if you see previously in December, since the FII ownership was going higher for smaller caps, right, or small caps, so you can see that they have relatively outperformed Nifty. So Nifty has fallen 8 to 9%, whereas this only fell nearly close to around 3%. So let me just open Nifty small cap here. So when I open Nifty small cap here, you can see that it had only fallen around 2% compared to Nifty, which had fallen nearly 8%. So this way you can attribute most of this selling, because DIIs on the other hand are buying, right? Most of this selling can be in mid and small cap. So this can be one of the reasons, right? So if you take a look at mid cap also, it is more or less similar, right? So you can see the holding of mid cap, which is actually in the dotted lines, right? So the dotted black lines. So again, if you see the holding of mid cap, it has been one of the highest since 2005. So way more than what they had owned previously. But similarly, you can see with respect to large cap, right? So from December 2020, there has been a significant outperformance in mid cap and small cap, and significant underperformance in large cap. So the reason is, so from 2020 you can start seeing this. They have started accumulating more of mid and small cap, and they are selling or reducing their holding in large cap. So at one point in time, so their lowest was somewhere around 80% of large caps, but now it had come somewhere close to around 73% of large cap, right? So it was one of the lowest. So this is basically from Bloomberg. So this entire source is from Bloomberg, and you can see very well how exactly FIIs buying or selling has influenced the market. So you can see exactly when the peaks were made. So exactly when they started accumulating large caps. For example, in 2017 they started accumulating large caps. So from 2017 to 2020, so this is 2017, right? From 2017 to 2020, so the large cap started to go up, because you can see here they were accumulating large caps and they were selling small caps. So while the large cap started to go up, so the small cap during the same period started to come down. So it is not just a coincidence that simply something is going up and something is going down, because these institutions are dealing with thousands of crores and they can literally move the market. So this is one data point which I wanted to present to you. So out of all this heavy selling which we are seeing from FIIs, right? So you can see from here. So previous year alone, I think they had sold nearly 3 lakh crore, and from October they have been consistently selling with huge numbers, right? Most of it previously can be in larger caps, but currently in the last 2-3 months it has been primarily in mid and small cap. So this leaves us with the next question, right? Why is FIIs, or why are FIIs actually selling so much only in India? So are they selling in all other markets, or is it only in India? So the reason is, First of all, Indian market valuations were slightly expensive when compared to the global market valuation. So you can see that the entire globe today is hardly around 5 to 6% from all-time high. So 5 to 6% away from all-time high. So we are hardly 5 to 6% away from a 52-week low. So ours is one of the worst performing markets if you take a look at it over the last 1 year. So from last 1 month, if you put a list of the entire global index, so you can see that Sensex comes under maybe in bottom 4, right? So there are whole list of indices which have actually outperformed our entire market. So this shows that the global sentiment is extremely positive. In spite of that, we are actually underperforming, which is not a great sign at all, to be honest. So the thing here to note is, so one, the money is flowing out of India and it is moving into other markets. So why it is moving into other markets? So it might be due to cheaper valuation. It might be due to much more attractive markets elsewhere. So that can be the first reason. So if we have to list out 2 or 3 reasons why FIIs might be pulling out, that can be one of the reasons where other markets are way more attractive than Indian markets. So now the question comes, why exactly can other markets start to become more attractive than Indian markets? So the reason for that is primarily due to India's growth concerns, right? So India is portrayed as the fastest developing country. So when you say the fastest developing country, so whenever US and China was at our stage. So when I say our stage, we are somewhere close to around $4 trillion economy. So whenever US and China was in and close to around $4 trillion, so their growth rate was surpassing 7 to 8%. So very easily they used to cross 7 or 8% growth rate, especially China. So they were growing upwards of 8-9% when they were around a $4 trillion economy. So a similar thing was expected from India, but unfortunately, India is finding it hard even to reach 7%. So if you just put India's GDP slowing, right, so you will find a lot of articles where from targets for GDP growth has been revised from earlier 7%, 7.5%, 8% to 6.5%. So it is revised not just by RBI but various other economic institutions. So that is one major concern where it is not growing as per expectation. So it is not that India is not growing. India is definitely growing, but it is not meeting the expectation. And the second major concern is the devaluation of rupee. With Trump becoming the president, so he is imposing a lot of tariffs which are actually strengthening the dollar and weakening the rupee. So even though it is going to affect the entire globe, somehow Indian rupee has devalued more than most other currencies around the world. So what it does, even though the FIIs can actually end up making say 6 to 8% per annum with by investing in Indian markets, if they lose out 6-7% in rupee depreciation, when they pull out the money, they don't have any real returns, right? So the real returns is zero because whatever they have made gains from the market, the same thing has been washed away with the rupee devaluation. So these are some of the major concerns due to which the selling has actually been quite massive. And the selling is so massive that today the FII ownership of Indian equities has hit the rock bottom. So here is an article by LiveMint, and when you take a look at this FII ownership of Indian equities, so this has hit a rock bottom. So in January 2015, so you can see that nearly 20% of Indian equities was owned by foreign institutions. So currently it has come under 16%, or somewhere close to around 16%. So if you take a look at it, in December 2024, so with the lowest holding, they had nearly 71 lakh crore invested in Indian market, and that has now dipped to around 67 lakh crore because of aggressive selling and also Indian equities going down. So this is not a great sign, to be honest. So one, the foreign capital losing confidence on India is definitely not a good sign. So which means that we should really start working as an economy to boost ourselves. But on the other hand, we have also seen a lot of strong domestic flows, which is a plus point. So if this same amount of selling had come any other time, right, without the kind of inflows that we are seeing, right, so then it would have been a totally different case because the domestic institutions weren't so strong prior to 2020 before people started coming into market. So today they are able to hold it because of the domestic fund support, right? So that is what is really holding them. But the main concern here is how long can they really do it? So because I can see a lot of people today who have actually made money or who had done a lot of SIPs, right? So they have started to withdraw their SIPs. So a lot of people have stopped doing their SIPs. A lot of people have started to withdraw their SIPs, and this number can be seen in the latest January report. And people are saying that the February report is going to be much worse because I think in January nearly 5 lakh people had stopped their SIPs, and going forward in February it is expected that even more number of people are going to stop their SIPs because their entire SIP has turned red. The whole portfolio has turned red, and this is not a great sign at all. So in spite of all of this, now when I actually open screener.in, so you can see the valuations of small cap and mid cap. For mid cap 150, so you can see that the median PE is actually way higher, right? So the median PE is around 26, but currently in spite of this correction and the earnings going up, the PE is around 35. So which is not a great sign at all. It looks like as though it is still way overvalued. So what actually I want to convey from this video? Obviously, I won't be able to share the outlook, right? But I can simply say this, that in case if the FII holding in small cap and mid cap have peaked, right? So in case if it has peaked, considering the valuation of small cap and mid cap, which is way higher than the median or way higher than its previous average, and also in case if rupee starts to weaken and India doesn't grow, FIIs are going to sell more. And all these three put together, right? So three things. One is the peaking of ownership, weakening of rupee, then slow India growth rate, better opportunities elsewhere. So along with that four, the fifth and the most important one is stop of fund flow from domestic institutions. If people stop doing their SIPs, if people start cancelling their SIPs, right? So this can trigger a further fall. So it is not that it will, but there is a possibility of this happening. So I want to end my video with this. So let me know what are your thoughts. If you have liked these data points and you want more such videos where I can share more such data points, how exactly the entire market is functioning. So meanwhile, before we end this video, I would also like to talk about the sponsor for this video, which is Delta Exchange. Delta Exchange is a platform for crypto F&O trading. So in case if you are an active trader in F&O and you want to try with small exposure towards crypto, so you can definitely check out Delta. I have attached the link in the description below. So with that, we also come to the end of this video. I hope you have found this video informative. If so, then make sure you hit the like button, share this video and follow me for more. Thank you so much, guys.